Good morning, everybody. Ryan, is your microphone on?
Good morning, everyone. Welcome to the Flow Show yet again. Morning, Kay.
Good morning, Ryan.
Right, just to address the comments issues, you're all back in the normal comment stream, I see. Apparently, you can only still see just hosts and panelists' comments at the moment. I've been told pretty much right this second that a setting has been changed, hopefully to allow it. I'm not sure if we would all have to refresh this session, which I'm not going to do, by the way, otherwise it means closing it all down and reopening it. So if we can't see it here, we'll look at it and see if we can see it on the face. But keep an eye on the chat. If you can start to see other comments, please let me know so we know whether it's working or not. Anyway, on with the show. As usual, we've had a pretty busy morning. That seems to be the theme of late. Lots of headlines going on, sources, stories and the like. So let's start, as we often do, in China. COVID cases over there were up 237 officially recorded for the day. Yesterday was 167, so cases still climbing there. Bit of news on the economic side. The big five car firms over there reported commercial vehicle sales down 41% year on year in June. So not good news over there. Lockdowns obviously taking effect and supply chain issues there. On the geopolitical front, we've had this talk going on for a while, but apparently it's getting closer that Nancy Pelosi is going to head to Taiwan next month. Always a touchy subject for the Chinese. They've been out in response to that story, saying that they will likely have a strong, swift response to Pelosi turning up in Taiwan. Obviously, they see it as their sovereign territory. So any US bigwigs heading over there is taken as an affront. So usually it's just talk, but we'll probably expect to hear about increased flyovers, as they like to do around there. So another bit of geopolitics into the risk picture there. Coming across to the UK and a bit of news, Boris's government, the Conservative government, survived a no confidence vote last night. Big strong margin, 111. Absolutely no chance of that failing at all. But the funny thing was, the no confidence vote was actually called by the Conservative Party, and the reason they did this was that the Labour Party leader Starmer was pumping a no confidence vote, but the way he worded it, it was a no confidence vote based on Boris remaining in charge as caretaker, which wasn't accepted by the House, wasn't accepted by everyone else as a legitimate reason for calling a no confidence vote. It's a no confidence vote in the government, or that's it. So to call his bluff, the Conservatives called a no confidence vote and won it handsomely. So a bit of political games going on there. No real effect there in the pound on the news. It's still political games. On the leadership front, we're down to the final three, and that's Rishi Sunak, Liz Truss, and Badenoch is the other lady in. So two ladies and one man. That's going to get Whittletown, I believe, to the final two over the next couple of weeks. I'm not sure if it's going to happen before the summer recess, which is not too long, I don't think, maybe the end of this week. So that'll lead things down. Sunak is still pretty much a strong favourite, but the numbers do keep wavering on the betting between these three. Sunak was always really my favourite to take over. He's probably going to be the most market positive if we get a reaction based on his performance as Chancellor, which, while some in the UK may think that he didn't do that good a job from an investment point of view. You know, he seems to have a good handle on the finances. He knows that the bill has got to be paid for all the COVID stuff, as well as the other finances, but he's not an austerity chancellor, if you like. So he's not going to crunch things just to pay the bills. He seems to have a sensible grasp on it, and so from investors' point of view, that could be a positive for the pound should he get the top job. We did get some UK employment data out. Let's get that up for you so we can see what we're talking about. Where are we? There we go. Right at the top now. It's a bit of a double-edged sword, this one. If we look at wages, first of all, wages came in pretty strongly, 7.2% headline wages in the private sector, 1.5% in the public sector, which shows you the disparity between private and public sector, and why we've got a lot of potential calls for strike action in the UK, particularly in things, the public sector, refuse collection, that sort of thing, because public sector pay really does lag private sector. So 1.5% rise in public sector pay compared to how hot inflation is running is not going to cut it. But the real view was on real wages, i.e. wages adjusted for inflation. Now they fell 0.9%, that's including bonuses. Excluding bonuses, they fell 2.8%. So very, very soft on the wage numbers there, reflective again of inflation. But on the other side of the coin, there was some pretty strong numbers as well. As you can see there, the employment change up 296,000, you know, a huge beat of expectations and a big jump on last month. The unemployment rate stayed at 3.8%. That was partly due also because of that big jump in employment. But on the participation side, we've seen 144,000 people come back into the jobs market. So it's really now starting to eat into those who were out of the jobs market since COVID. They're now coming back in. Now, whether that's down to necessity because of the cost of living issues and people now being forced into more work. But the positive from that is that it will ease the tightness in the labour market, or should ease to a point the tightness in the labour market, because now more people coming in looking for those jobs. Vacancies are still running high, something just under 1.3 million. So that gap will start to now, more people coming into the workforce should start to ease the tightening labour market, as is seen. So as far as that data goes, you know, 6 of one, half a dozen of the other, as we like to say. Is it glass half full or glass half empty? It's probably both. So no big shakes there, but again, it just shows that the UK isn't necessarily falling into that fiery abyss that everyone's been predicting for the last few months. Over to Europe and the ECB, and for once we got a sources piece before Thursday's meeting. Usually we get these after, where we get ECB sources say such and such or so many governing council members wanted a higher hike, or whatever the reasons. It often comes after, a day after. And I expect we'll probably get those sources pieces either later after the press conference or first thing early in the morning on Friday. But this sources piece, it's a bit of a funny one. Okay, it's moved the market, it's moved the euro, you know, no denying that, but the substance of it was really flaky in my opinion. They basically said, stating the bleeding obvious, that the ECB would be, or could be, discussing 25 or 50 pip hikes. And as someone said this morning, that's like trying to tell us that water is wet. Of course they're going to discuss 25 or 50. Wouldn't be surprised they discussed 100 or 0. So a bit of a fluffy headline, but markets and algos like to jump on things like that, and particularly money markets, as we know, like to get their pants on fire and run around the yard screaming. So just the mention of 50 basis points coming after we've had a slew of ECB members, including some of the more hawkish members, pretty much all saying that 25 pips is going to be the case. Lagarde in particular, just this sources piece, flaky sources piece, talking about 50 basis points has sent the market raising those expectations for Thursday. We've seen money markets now pricing in just over 100 basis points of hikes by the end of September. For July, the chances of a 50 pip hike are now 60% versus 35% yesterday. So naturally, we've seen the euro jump on such news, and it's keeping its bid up there for the moment. I did a little bit of jobbing on the first headline, and it was quite funny because it was Reuters who released the first sources piece, and their headline was ECB could look at 25 or 50 pip hikes. And then about 5-6 minutes later, Bloomberg decided to rehash the same story with a different headline saying ECB looking at 50 pip hikes, or looking more closely at 50 pip hikes. So this is the fun and games you get sometimes with headlines and headline trading, and Bloomberg are notorious for spinning a headline to get more of a market reaction. So I had a little fade attempt on the first headline after it pushed up into the 20s, got half of it away for a little bit, got stopped at break even on the way back. Tried again on the Bloomberg bounce, but got stopped on that one because the market just kept going. It's got this expectation in its mind now. It's again pushing expectations up to the high side. It's a bit like the 100 pip Fed stuff we had last week. What does that mean moving forward? Well, as I like to tell you time and time again, when I look at these events, when we go into the events, I want to know not so much what's expected, but what the big risk is. So now the market is shifting slightly towards 50 pip hikes. The risk of disappointment has now grown, because if they only go 25, we've had this extra layer of expectation put on than we had yesterday. That means that disappointment trade will be potentially more volatile. Now, there's two ways to look at that from a trading perspective. If you're long the euro and you think they're going to go the 50, you have to be careful, because if the market is leaning that way, the upside may not be as volatile as you may expect. It could be a case of buy rumor, sell fact. Conversely, if they only go 25 and you're long euros into the meeting, you've got to be very careful, because the reaction, the negative reaction in the euro could be far worse than it would be on a positive reaction. So that's what I like to base this on. I'm not, apart from long euro sterling, I'm not positioned into the event. I won't position for the event unless there's something standing out. But what I will be looking for is trading the reaction after, seeing what the details are. If it's going to be disappointment, then maybe trying to catch a short and jobbing it around. Kay, what are your thoughts on the RBA there? The ECB.
Well, I mean, the thing is, there is a difference in between what sources were saying before and now. To me, it's been a bit of a logic reaction, because all of the members said 25 it would be, but now we got the sources piece before the meeting, which we are not very used to, and so the market bought euros because the 50 BP seem to be real. I've been saying it for days. It would actually be a shame, because they have the window wide open now if they wouldn't do 50. But okay, now it seems to be some sort of, it reminds me of the famous Bloomberg reporter that went, the Fed is going to do such and such a day or two before the meeting, and the market reacted to it, which is exactly what's happening right here and now again. I also think the market is still very low. The medium or longer term market is still very long dollars, in my opinion. So not many have. So now we are in manage your positions territory ahead of the ECB, and yeah, I can imagine. Well, I mean, and also we have seen in other currencies the dollar coming already under pressure. Call it the Aussie, the Kiwi, the CAD, they all have reversed cable as well. We're above 120. So there's a bit of logic in the moves that we see. But I agree that the risk is now going to come back to the downside. Is it a case of ECB having sent out their submarines and saying that the 50 is on the table to tell the market that they will do 50, just as the Fed did? They had a pretty good example by the Fed. It is possible. What I think, particularly on this article and on what's happening in the market, is that yes, so people will scale down or are scaling down already for a couple of sessions their heavy long dollar positions. Even dollar yen is 2 big figures lower than where the highs were. So yes, there is but it will leave the door open to some disappointment. As a matter of fact, I bought a small downside, a 1 week downside this morning, because I don't want to stand in front of it really right now, but I would say that the disappointment trade is indeed going to be bigger than if they would do 50. But I've also done it because there's still a lot of risk on the Nord Stream 1. We don't know after those force majeure letters by Gazprom yesterday. We don't know whether this pipe is going to start up, or at least plan to start fully up at the end of the week. So I think there's a bit of risk building in here in the euro. So into the second half of the week, I think there's quite a big risk, both sides, for the euro dollar. And I've been saying in the room, looking at how nervous the market is, we have done 3 big figures from the low in the euro. If this breaks 103.5 towards the end of the week, if we get 50 BPs, and if the Nord Stream goes back on in at least a decent percentage, we could be trading 105 on the euro, but we could easily be trading back at parity or even below. I think we're in for a very messy and volatile end of week on euro dollar in particular.
Yeah, absolutely agreed. And we also got it again, another bit of a flaky headline or juiced headline, let's call it, from EU Commissioner Hahn. The headlines reported it as he's assuming, he doesn't think that the Nord Stream will come back online. But then when you actually looked at the story itself, it said they're working on the assumption that it won't come back online. So again, and this is where you've got to be careful with headline trading. You know, you can't take at face value some of the headlines you read, because the news wires, they want to shock, clickbait, whatever you want to call it. And sometimes the headline that initially gets popped up can get a big reaction in markets, and then you read the details of it and the real story doesn't match the headline. So it's something you've got to be really careful on. Oh, sorry, folks, just lost my mic there for a minute. Right, just before we get really stuck into the prices, just want to look at some of the other headlines. There's, little headlines from the RBA. We had a couple of speakers out. We obviously had the RBA minutes, which didn't really give us anything new. The RBA are on their path. They're seeing strong jobs, stronger wages. Just about they all agreed to hike the 50 pips, need to get the rate higher, blah, 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 blah. And RBA's Bullock was out, pretty much echoing that sometime after, saying wages were rising more quickly, and they need rates up to some sort of neutral level, and further rate rises are needed in the months ahead. So no real big news there, but the RBA stay on their path going forward. Right, I don't know if you've got any additional headlines, Kay, that you've spotted outside of that lot.
Yeah, the other one was that there's some risk going around that Biden could declare a climate emergency as soon as this week. So we were trying to brainstorm a little bit about what that could mean if they stop oil exports, and but the refineries are not running at full speed either. What it could mean for energy prices, commodities. It may, in my opinion, put a bit of pressure upwards, but it hasn't. It's not done yet, so we have to wait and see what's going to come out of there. But we might see a pretty big reaction in anything energy related if Biden would go ahead with what he with what the rumor is right now. So watch that space if ever he would declare a climate emergency there. So that's the other headline that I was looking at overnight.
Yeah, cool. And apologies, I've got it wrong on the Conservative leader race, as Anthony has just reminded me.
Right?
It was, Penny Mordaunt's was still in the running for that. I think it was Badenoch that got knocked out, I believe. So it's Truss, Mordaunt, and Sunak in the final three.
Yeah,
I believe. But yeah, nothing really to take note of there as yet. Right, so where do we start on the pricing? As Casey mentioned, euro dollar, it's really ticking up. It's taken another leg up and looking well bid on the ECB stories, but also a bit of dollar weakness that we're seeing across the board here. So a bit of a double breeze behind the euro generally. Got the 50 fib coming up at 102.83 there. That's the latest phase of the move down just into the end of June. I don't often run such a short-term fibs as I mentioned before, but I'm keeping one here in this instance. And then we've got a lot of eyes on the 103.40 level, which was the big multi-year low. Just give that a quick flush out, so you can see there 103.40 goes all the way back to 2017, 2016. That was the big level on the way down, and it's probably going to be a bit of a zone more than anything. We heard from Stel yesterday, he's looking at 103.50. We've got the fib there at 103.60, and this sort of area where as we came down to that 103.40 area, we only got down to the sort of 50s, high 50s, and a bit before. So it's going to be a bit of a zone. We probably want to see if we're going to tackle that. We want to see 103.60 cleared at least, but probably really to shake the tree, get clear of 104 as well. If we get above 103.40, you can't get above 104. It's potentially going to make it a little bit messy. We may have a bit of indecision in between the levels there, but if we want to look like we're really cracking higher, then get above that fib, get above the 104. That will be a real strong signal, in my opinion. And as Kay says, based on the ECB, from here we could be 105 or we could be back at parity. But it is going to be a big test, and we need to watch this level depending on where we are going into the ECB. If we're 10 pips of it, I'm going to ignore it as a level because the news will probably blast it, and the text don't matter in those instances. Support wise, we're now going to probably look to see if we get a bit of a build into 102. We have come up around 102.20 after the initial run higher. We did nick down a bit under, but that's where it's looking to park the bus at the moment. So probably 20 to 00 is what you're going to be looking for a potential support area. If we hold there, it keeps this phase of the move in play, and see where it wants to go thereafter. Euro sterling has made a break back above the 85 handle, again partly for the euro side. If they're going higher, this is the sort of effect I'm looking for with my longs. The ECB is a much bigger bank than the Bank of England. If they do go 50s, this is going to probably outweigh what the Bank of England does. So this is one of the pairs I'm looking at. Why I've been trading alongside here, to get perhaps a bigger reaction on the central bank divergence versus the BOE, rather than euro dollar versus the Fed, because this still puts the ECB are still well behind the curve. But it's all going to come down to how far the market sees the Fed going before they stop, and then that gap closing between the ECB and the Fed. How far does that gap close? Does ECB hike 3 times and then go on pause? That's going to still leave a huge gap between the Fed and the ECB, and that divergence trade is still going to be traded. And the same for the ECB and the Bank of England. So break here in euro sterling. Again, I'll be looking for this support zone to show up again, or this zone to show up as support. We've had the indications, bit of wish-wash through it, but now down in that 75-80 area, that's where the support is again. I'll be looking to see if we get support again coming into 85. That'll give this phase something to build a base on, like euro dollar. Dollar yen as well. I'm still in a short from Friday. That little itch I had to scratch. Took a bit off this morning at 72s. I'm in at 138.70. Took a bit more off at 72s. I'm looking for this move to hold, this break of the sort of 80-85 area. Next area I'm looking at is the low 137s, but we might have a bit of traffic here in the sort of the 40-45 area perhaps. We've obviously got the Bank of Japan coming up for this one as well, so I'm going to be very careful. If we get under this 40-50 area perhaps, I'll then start to bring my stop right down. I haven't brought it down as yet because I'm still a little bit wary of the volatility here. I may look to bring it down just above this resistance that we formed here around about 138.40 at least as a first step, and then hopefully bring it further down. But I'll be looking to take a bit more profit down into this area here, little slides off, and again down into the low 137s. I've not really got a view or a huge bias. I have wanted to be on the short side since we've ramped up the talk from Suzuki. I think this is, as I said last week, this is more rally sell than dip buy for the moment. But it's got a long way to go again before it even looks like turning around the trend. Even this phase from 127, huge move. So long way to go before we even get close to turn this around. So I'm in it. I'll ride it, see where it goes. Kay, you got any thoughts, dollar yen?
Hi. Yeah, actually, I tried to buy this dip just from pretty much the same reason as you're saying that you're watching what's happening in this zone, really. But it's really a very short-term play. I mean, in the long run, I still think Bank of Japan, whatever happens, will remain well behind all the rest. And now it's really up to economic data. But so my overall bias has gone from extremely bullish dollar yen to pretty neutral right now. And looking at the volatility, we can be moving in a call it 2.5 to 3 big figure range. I wouldn't exclude a move back to 140 after the Bank of Japan, if no other misery comes out of in economic data, and if Bank of Japan hold their hands still, there is still this risk for 140. But then on the other side, there's an increased risk of interventions if dollar yen would go on its own. So therefore, I'm in more of a range mood right here and now in what the yen is concerned. Do you want me to take the screen for a bit?
Yeah, you can do. Just before that, what I was going to say about dollar yen is, for me, the lower we go before the Bank of Japan, the more I'll be looking at those highs to hold if we get a jump on them doing nothing again. That's the sort of thing I'd be looking for. We're just 170 odd pips off those highs. Are you expecting a big reaction if they stand pat, or can you see those highs holding if we're some 200 pips off?
Yeah, I think what we are seeing in this market is a dollar correction, right? I mean, globally. And
Yeah,
you add to that what the MOF has been saying, that they are seeing speculative signs of speculative moves. So that should really heighten our level of alert when if dollar yen goes up. But the fact that Bank of Japan is going to do, if again, if they do nothing at all, it's going to bring those speculators out again. I think for the real test of where the MOF is, and that's the reason why I don't rule out a test of 140 after all.
yeah,
Some people are saying that the MOF is not going to intervene before 150, but I think it's that the price is less
immaterial.
important. The actual rate is less important than the speed
Yeah,
and what they see in the market. Again, if dollar yen goes on its own, and if all the yen crosses start to ramp higher again after the Bank of Japan, MOF is not going to like it if the rest of the dollar sphere is not strengthening, materially strengthening.
yeah,
Because the Bank of Japan somewhere, or the MOF, they are not completely stupid, right? They also saw that euro dollar came off from 120 to parity over the past year or two. They also saw cable coming off from 140 to 120. They are not going to stand in front of the market on their own, and because they have also seen what happened to the S&P when you try to stand in front of the market on your own. So,
yeah,
but if they see a renewed move where only yen moves, I think then we should be really, 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 really careful. And the level, the real price won't matter that much, but I would suspect, since they increased their rhetoric after we have seen a move up in the 139s, I would suspect that they wouldn't like it to really ramp through 140 and then go higher. So we might see even more comments if it goes up there.
yeah. And I think that mood or that sentiment change in the dollar right now is very important for trading the Bank of Japan, because, like Kay says, if dollar yen or yen gets sold and dollar yen jumps, and that's out of sync with the rest of the dollar complex and what's going on elsewhere, that is when I'll be looking at a fade trade, because that to me is saying, right, this is taking it out of sync, even though this is what's been happening for months. Right now, that takes it out of sync. And if we're down around, say, 137, 37 and a half into the Bank of Japan, something like that, then 200 pips to the highs is going to get me maybe a bit itchy for trying to short if it shows that it's holding, because that'll be a decent enough reaction on the Bank of Japan standing still. But with those factors playing in, that the dollar is weaker, the MOF has jumped up its rhetoric. I guess what I'm saying is there's a bit more reasons to try a short than try a long from that point onwards, and that's how I'm going to be looking at playing it once we know what the Bank of Japan are up to. But anyway, I'll hand over the baton to Kay. Give me 1 second, mate. Right, all yours.
Yeah, thanks, mate. The first one I'm going to show today is euro yen. Because I've been playing that a little from the long side. Unfortunately, didn't really keep it. But looking at those risks in the euro with the ECB, and then these turbines sent over from Canada, giving a bit of positiveness to the euro picture. I've tried to buy this of this level, and I think that if we get towards the end of the week, if we get some more positives for the euro side of things, and the Bank of Japan holds its hand still, I think there is a fair chance that this baby goes back into the high 142s, even 143. I'm looking at this level here, which is 139.80, 139.60, call it. To hold or fold on the euro yen. And since I expect a very messy end of the week for the euro, I do think euro yen might be one that is really going to go on the move. So I'm keeping a very close eye on this 139.60-80 zone. And then on the other side, 142.70, 143, I think is going to be pretty important as well. Because if it would go back above there, there is a chance that on the much longer term, sorry, that's not the one I want. There is a chance that on the longer term, we get back in the end to those December 14 highs, if things fall into play. But that's why I'm keeping a very close eye for this week on this 139.68. It has been holding this week, so it seems the market is paying attention to it as well. And this is sort of the level I was looking at in this dollar yen, and I'm really, it's a very short term try. This is 137.70. Here we have 137.55. We're actually right trading on it. If it breaks lower, we could have a move back down to low 137s, or even why not trade into the 136s even before the Bank of Japan. But okay, it's like a small catch of the knife, risking 20-25 points on that, and then see what happens there. So then move on to the traditionals. Of course, this morning with the ECB story, we saw the German rates jump back up. I know one of the listeners said, why not you look at EU rates? But the EU, in my opinion, is a little distorted due to what's happening in Italy and Spain, because those varying spreads that have been trading. It bothers me a little bit to look at EU rates, but that's only me. If EU rates work for you, that's absolutely bringing to a little bit of a resistance zone here at the minus 250 BPs between the short German and the short US rates. Sorry. So watch out a little bit for that level. 250 is if it goes above, euro could see another leg higher. So watch out for that a little bit. On the euro dollar, yeah, kind of. It's all pretty much there in the levels. We have a level here, in my opinion, and then the bigger one, yeah, around this 103.5. This is going to be the zone. It's at least in the medium term, the zone of no return, and that's roughly this one. It comes in a little lower now, but we can put the line there. This is roughly your 105. What I was talking about. I was saying in the room, really, it could be a very messy end of the week for the euro. Euro dollar could end up at parity or at 105 really at the end of the week. I really feel that there could be a big move coming, especially that the rest of the dollars are also on the move, and we've got those two events in for Europe coming up. The other one, let's have a quick look at our metals in the meantime. We always try to keep an eye on those. Gold is really struggling to make it back above 1722 already. Has to go below there to above there, sorry, to even have a chance to get back up to 1750. So watch this 2025 zone on gold, and the 1700, 1698 to the downside. Not a lot to mention there. On silver, I've been buying. Where's my trend line gone? I've been buying a little bit. Here it is. This is the short-term trend line. I've been buying a little bit of this zone here, and looked some out yesterday around 1895. Yesterday it was around 1895. Today we're breaking, but pretty sideways. I'd like to see it go through 19, 15, 17 to be a bit more confident on that one. What I did is to fold a part of what I bought in this zone here on the way down, and then taking profits. I folded just a little bit of it into my longer term holdings in case that we are building a bottom here. and in case the dollar is showing signs of really starting to reverse, which in my opinion is still a very early call, but all reversals start with some form of move. Yeah, I've seen on the Aussie dollar. So we've hit this low here. First of all, we've broken through this 67.60. We hit this low here, which was on the little bit below the trend line. Next fib support, extension support, broke back above 67.70. Yeah, 67.60. Broke back through this little trend line as well, and we are already above the next one. Aussie is really putting in a performance. To call a reversal, it is possible that the reversal is on the way. As I was saying, every reversal starts with some sort of a move, but I would really like to see tackle above this 69, 10, 10, 15, 20 level. If we start to trade above and hold, this could really mean that we are probably doing a W or so, and why not move back higher? I think the risk now, small risk at 68.70, bigger one 68.25. If we get back below this 68.25, which we were here as well, then I think it's bad news for these currencies, and I think it will come with a global dollar move again as well. Now everything, the dollar sphere is moving together. Most of the pairs are moving together. So if we get back below 68.25, I think it's bad news. But in the meantime, positive. Same thing on the Kiwi, and that was a pretty cool move. Okay, depending where we put this line, it came right on there or just fell shy of the trend line here. But we are already moving back to the top side of this wedge. So we've got 62.35. We are right trading on here. This is an area of interest to me. But being back above the famous 62 that we highlighted so many times in the past is a pretty good sign for the Kiwi. So I would watch a close at 62, and for a bonus, a close 62, 25, 35 will be pretty important for the close tonight, in my opinion. If we keep it, 62.90 will be a bit of a target or a resistance that we've seen here, but why not go back to 64s if this is the dollar reversal? But we need confirmation of closes above this zone. Okay, let's have a quick look at this one because we are moving quite rapidly higher again. I'll still be watching this 133.90, 134 zone, which is the longer term break that we had with a retest and a move back down to below 130. Same as in the rest of the euro pairs, the euro is putting in a strong comeback, also helped by energy coming off in the prior sessions. But if we ever make it back above here, not above here, if we ever make it back to 133, I might try to from 133.60, I might try to give it a try short again with a reversal if we close above 134. It's still going to be a very, very, very important zone, as there's been enough holds and retests and then the final breakdown. All in all, if we get back below 130, 130, which is a while away now, then it may be spelling trouble for the euro towards the end of the week, and then we could see a move back towards the lows. I'd say big range for now, 130, 134. If we would break back below this 131.5, why not go and test this trend line here, which is going to come in somewhere around 127. But that's music for later in the week. I'm sort of done on what I wanted to show today. Oh no, yeah, no, I did show the EUR. Ryan, anything else?
Yeah, and mate. Yeah, just having a look. You've covered most of the points there. Yeah, just having a look if there's anything else. Gavin was looking at Guppy.
Did you look at the cable?
Just briefly when we were talking about the stuff. You can
I've got this. I've got this level of interest here, 120 the figure, and then this 120.20. Which people were looking at as well. Next one should be up in the 120 and a half, 3/4 zone on the cable. Could be a bit of a resistance there as well. I'd say, which is probably going to be right here. I'd say watch out if we close back below 120 though. 120 is going to be a bit of a pivot continuing this week. I think if we get closes back below 120, it might not be looking that sexy for a higher recovery. If recovery has to continue, 120 and 3/4, and then to me, which is still a pretty solid area of interest, is going to be this 121, 55, 65 again, which I mentioned already quite a few times. So watch 120 half, 3/4, 120 on the other side, and if we get back below 119 and 3/4, then we might be in for a move back down. And that's it for me, really.
Yeah, cool. Thanks, mate. Let's have a look. Let's grab the charts there. Bingo. Yeah, I was looking at the Aussie just as you were going through it. I've got a fib here of this the June move 69.10 and or 69.11, and it's funny because the 69 or the 10 number in Aussie dollar is quite a significant one. It can show up a lot. When you trade big figures and when big figures trade, you usually have what's called the 80-20 feature, which is, if you get a first test and break, 20 is usually where it peters out on the downside. If it break, 80s is where you can find a move coming to rest. But the 10 number in Aussie dollar is something that I've noticed a lot can have a big say in price moves. So if we get a break of 69, I'll be looking to see if something happens in the 10 area. The fact that we've got a fib there is by the by as well. But it's just something to keep an eye on when you're trading. You see these little patterns sometimes popping up in FX pairs. Now, what I want to ask you, ladies and gentlemen, also, part of this show is I want to get a lot of input from you guys. I don't want it just to be about me and Kay and Stel and whoever else just waffling on for 40 minutes, an hour every day, our own stuff. I want to get your involvement. And what I'd like to do, if any of you guys and girls are up for it, is if you're willing to come on the show one day just to have a chat, we can talk about your trading style, some of the pairs you're looking at if you just want to talk technical analysis, but just to get your involvement in this sort of thing. As I say, I don't want it to be just about me and Kay and whoever waffling on. I did this feature actually when I was at Forex Live called Guest Trader, which for a week I would get one of the readers writing on the blog, just maybe picking something they were looking at that particular time, doing their analysis, talking a bit about their trading style and what their pitfalls are, what their strengths, what their weaknesses are, and it was just giving a vehicle to us retail traders, you retail traders, just to see that we all have the same thoughts, we all have the same emotions. Just because my name's on the show doesn't mean I'm the best trader in the world. I'm any sort of superstar. I'm no different to you guys. I've just been doing this a long time. That's my strength. But I have the same weaknesses as everyone else. And I think it's good to get an impression from other people, other traders, to show that we all go through the same stuff. Doesn't matter how long we've been doing this or how little we've been doing this. We all go through the same emotions. We all suffer the same things. and just to get another point of that. So if you want to come and join us on the show for a day, no pressure. We're not going to bite you or head off or anything like that, or put you on the spot. If you want to come, and I'll get the link in the room. If you come to forexflow.live and hit the contact button, you can just fill that out, send me your details, and I'll put that link in there for you. If you want to come and do that, then give us a click. Just send me your name and details and on via that secure function there, and we'll get in touch with you and set something up. But yeah, I really want to hear from you folks in more greater detail. And Mike, you don't need to be camera shy. You don't have to come on the video. As you can see, I'm not on the video right now. You don't want to see what I look like most mornings anyway. It's only the 8 cap thing we do on a Monday and Wednesday where I have to put the video on and iron a shirt, but I cheat. I do what I used to do on the life floor when I used to wear a life jacket, the trading jacket. If I didn't have an iron shirt, I would just iron the bit that you could see, and the rest of the shirt was completely screwed up. But that's what I do for the 8 cap folks. But anyway, if you want to do that, just send me your details via that contact form there. As for the rest, really, again, just looking at where we are in everything at the moment. You know, we talk about the data, we talk about the fundamentals, what's going on in China, what's going on with UK jobs, that sort of thing. And one of the reasons I trade the fundamentals is to get a sense of what central banks may do and which way the winds are blowing. So just to give a quick overview of where I think we are now. It seems right now we had a lot of recession fears over the past couple of weeks coming in, and those have abated a little bit. I wouldn't say they've gone away, but we've switched away from those for the meantime. The data has been coming out. We have seen some negative numbers coming out across the globe, really. Maybe not to the speed some might expect just yet, to see whether rate hikes are going to really start biting. Obviously, we've got worries in Europe with the war, with Nord Stream, with the potential for a recession to come there, even before the ECB started hiking. You know, so that's been a double whammy for euro dollar, where we've had the Fed ploughing on ahead and a little bit more uncertainty in Europe. You know, that's why we've seen euro dollar coming off so much. But it's not been alone. The same's happened with the pound. As we've seen from the data in the UK, it's not perhaps been as bad as many in the market was expecting. So again, it may not mean you're steaming buying the pound with everything you've got, but it potentially means that we're done with falling for the moment. And that's pretty much the situation around the rest of the globe. We're in a little bit of a pause phase at the moment. We've had or have priced in potential recession worries. We haven't yet seen that really come to light in the data. We need to watch that. So, you know, we perhaps are in a little bit of a pause state. As I say, we're seeing the dollar buying get as far as it needs to go for now. But if it is to reverse, we need to see key levels in these currencies breaking, like the 103.40, 60 area in euro dollar. So it's about matching the fundamentals where we're at, putting that into the charts and seeing, right, if this is a bottom, where's the bottom going to be? What clues do we need to see to signal that bottom's in place? And breaking the high levels is that's what we're going to need to see. But anyway, I don't know if you've got any final thoughts, Kay. If not, we shall.
Mike says, do you believe when the American traders come in, they will push euro back down? And I really, I mean, at this stage, I really don't know. To be fair with you, they can. What we've seen over the past sessions is they did not, apart from after data, they did not really reverse the moves. So I would suspect that they might need a small extension to what we are seeing here and now. But where they are going to take it up to, I don't know, 1 or 2, 3 quarters, 1 or 3, maybe it's possible. They can also put it back at the 1 or 2 figure 5. Really, for now, I want to keep an open mind, really an open mind. Hugo was asking about the Canada yen. Do you want me to take the screen just for 1 second to show the Canada yen, or? Okay. Okay, Hugo, the Canada yen. Well, the bigger picture is still the same, right? We had where are we? Oh, here. The bigger picture is still the same. Yeah, big bull flag. This could be going to 110 in the end, because nothing has changed, right? Not so far. Nothing has changed. That's the big picture. But even in the smaller picture, we have been. This was a bit of a triangle. We broke it above, and we're holding it. Now we are putting in another bit of a trend line to go higher. I wouldn't be surprised if we get back to this 105.30, 105, the figure zone. Nothing should surprise in this market without even changing the whole global picture, right? But if it would go below 105, I would be a little bit worried for this particular move right now, because we are trying to make a break for it on the top side again, but things may not go in a straight line this week, so I'm not involved in it right now. Actually, this 106 45.50 looks to be a bit of a resistance. We've tried above and then back below. We really need to break the prior highs, I think, above 107.20 to be talking to then see a continuation of this big bull flag pattern. So for the time being, personally neutral, because I'm relatively neutral on a lot of stuff, but I'd like to see what's going to happen on the Bank of Japan before making any new decision on this. We had the overshoot on Canadian on the Canada weakness last week, with dollar Canada really flying one-way ticket up to 132, but equally the brakes have been slammed on pretty hard, and we went 300 points back lower, which put this Canada yen. It's rather the Canada move than a yen move, really, of what's been going on of late. So we have to be looking a little bit at what energy is doing and stuff. But undeniably, for now, looking at this picture, is undeniably still oriented where the top side. We really are. To reverse the whole thing, I think we need to break back below 103.50. If you break back below 103.50 and hold, then we might see a much deeper move. But so far, it is still pretty bullish. And that's it for me, Ryan.
Yeah, thank you very much, Kay. And we'll call that a session, boys and girls. Hopefully, touch wood, we'll have these blooming comment things fixed by face. It's just a difficult situation. We can only test it when webinars are open. So it's just trial and error, but we are working on it and we hope to get it fixed as soon as possible. So don't forget, you can catch us again on Face. If you don't know that, it's the show later on with Dale and the rest of the team and the great interviews they do. But thank you very much for supporting us in the Flow Show, and do get in contact with us if you want to, come on board and have a crack, and have a great day today, and we shall see you tomorrow. Thank you very much.
Have a good day, everybody.